What is the potential for this Bitcoin rally to reach? How should we position ourselves in the short term? If you're interested in these questions, please keep watching. Let's start by taking a look at the positions I have opened on Bybit. Currently, I still hold a Bitcoin position worth $750,000. The entry price is around $28,500. In addition, I have added an Ethereum position in the past few days, which is also slightly profitable. Now, let's look at the aspect that everyone is most concerned about, the returns. Currently, you can see that the funding fee is quite high. However, even if we deduct the realized funding fee from the unrealized profits, we are still making nearly 2 million NTD in value, which is a decent trade. If you also find this profit quite good and want to engage in trading, you are welcome to click any of my videos and find the Bybit link below. By completing KYC and depositing $100, you can immediately receive a $1,000 worth of Bitcoin contract position. This contract position is real, which means that when you make money, you can withdraw it directly. You don't have to wait for this promotion either. Just complete KYC and deposit $100, and you can choose a $1,000 Bitcoin contract position. You can choose either long or short positions. Just click the link. Now, let's get back to the Bitcoin market. From the weekly chart, there are a few key levels to consider. First, we mentioned earlier there is a clear inverse head and shoulders pattern. So what is the target price for this pattern? I know this method is quite simplistic. Indeed, it is. But we can roughly estimate. It is approximately around $42,000. It's around $40,000. We can also align this with the wave analysis we discussed earlier. The correction phase in between can be connected by two uptrend segments. Hold on. First, there is a wave of upward movement. Wait a minute. Let's change the upward movement color to green. There is a correction after the upward movement. And then there's another upward move. Although the heights may vary, I believe the structure will follow this path. So, if the structure follows this path, and even with varying heights, we might reach such a level. Okay. But if it only rises to around $30,000, if it only reaches a little over $30,000, then you can see that these two upward moves are on different levels. So, I believe that this current bullish wave, since it was initiated around $25,000, should at least reach above $40,000. As for whether it will go above $40,000, I genuinely don't know, because of the wave structure. However, we can still use the patterns we measured before to estimate a target price of around $40,000 or more. I believe it can at least reach above $40,000. Now, if it's possible to get close to $40,000, it's within this range. Since we have this broader context and a trend judgment, we can switch to a smaller time frame chart to find entry and trading opportunities. Let's take a look. The most important thing is this subsequent wave. This ongoing market movement. After the downward break and rebound, it initiated this upward move, which is currently in an oscillation phase. In this oscillation phase, I would consider this point the most critical. If we measure it to the lowest point, it's around $29,400. $29,400. This position is indeed crucial. Why? Now, let's switch to a lower time frame. The 4-hour chart. We can see that in the current corrective phase, there is one significant downside spike. Don't underestimate this spike. If you're trading with high leverage in short-term cycles, this spike will make you very uncomfortable. Let's measure it. It's approximately a $2,000 drop. Just imagine, for a trader using high leverage, a $2,000 difference is definitely unbearable. So, I believe, and there is reason to believe, that this downside move of around $2,000 has already cleared out all the high leverage positions. All the highly leveraged long positions have been cleared out. Under this premise, we shouldn't expect any form of return to the lowest point below here. Actually, we can see that in the previous corrections, although they were of different levels, such as the one on the daily chart. I believe the retracement to that level was intended to shake out trend following long positions with higher leverage. Many people, especially those holding trend following long positions with high leverage, exited at that point, and even spot positions were cleared out. After this significant price drop, it is highly unlikely that the subsequent retracement will revisit the bottom formed by that drop. It is absolutely impossible, because if it were to retrace back to that level, it would not be just a retracement. Therefore, I believe we can establish a standard for the current consolidation phase. If the price revisits the 29,400 level, I would consider it a strong signal that the market will experience a larger correction before any chance of an upward movement, or even a trend reversal. Hence, this could be a suitable level to add positions or set protective stop-loss orders. Now let's look at another aspect. We can observe that in previous instances, like the one here, this level has been tested multiple times. As you can see, it's been tested here, here, and here. But the candle bodies on the 4-hour chart never successfully held above 30,700 to 30,800. Never. However, recently, based on these candles, we have seen a breakthrough followed by a minor pullback. Could this turn the previous resistance into support? Currently, it seems favorable. When we broke through, the trading volume was not significant. But during the pullback, we observed a contraction in volume. This type of incremental and low-volume upward movement has been characteristic of the recent bullish trend. Is this upward movement possible? Yes, it is. Actually, I believe there are two possible scenarios for a bullish trend at this point. The first scenario is a strong breakout with significant trading volume. It's fine. The second scenario involves a gradual and sustained uptrend with lower trading volume. However, it's crucial to avoid any significant increase in bearish trading volume, as the current bullish momentum is already weakened, and the focus is on using time to create upward momentum slowly and steadily. Typically, sustained trends do not rely on sudden volume surges. While a sudden surge can lead to rapid price increases, it also increases the likelihood of reaching a peak soon after. If we look at the previous bull run on the daily chart, it didn't solely rely on explosive volume. The most frenzied price increases occurred later in the trend. Before this, the biggest upward movement, I reckon that this is the biggest surge. It was characterized by gradual, step-by-step increases. No explosive surges are seen. The volumes were consistent too. Even in the later stages, it continued with a step-by-step approach, rather than the explosive moves seen in bearish trading. This is not seen in this bullish run. This gradual and smooth approach allows for a longer and more sustainable uptrend. Therefore, I firmly believe that there is a real opportunity for it. Now, let's turn our attention to Ethereum. I currently hold a smaller position in Ethereum compared to Bitcoin. It's much smaller, which is approximately $50,000. While Bitcoin is showing more strength in this small bull run, I am observing an important S/R reversal level for Ethereum, around $1,920. So, you might have realized that I opened the position after a breakout here. If Ethereum were to fall below this level, I would consider closing my position. However, I am willing to give Ethereum a chance by holding a smaller position and monitoring its performance. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. By the way, if you are interested in joining my public line group, I would be grateful. Alright. Bye-bye.